It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. With me in the KFG studios, my business partners and fellow CFPs, Kevin Korhorn and Josh Gregory.
And hot off the presses from the Optimist Club, most economists are forecasting significant headwinds financially, even a recession. How do you like that? Happy New Year. Regardless of the conditions, what should you do today to thrive financially this upcoming year? We're going to help you with that and more on today's episode.
That's right. Special edition of the Wise Money Show coming to you on New Year's Eve. We recorded this in advance, of course. I hope you are looking forward to some safe and fun plans tonight, celebrating the new year, and looking forward to a great upcoming 2023. And that's really what we're going to talk about today. I'll get into that in just a second. If you have a question for the program, we'd love to hear from you. If you have needs, need a second opinion, have some issues going on in your financial life, we're here to help as well. You can call or text us 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com. You can engage with us that way as well. But most people do on social media. YouTube gets a lot of attention. There's a lot of energy there. So you can find us there or Facebook, wherever you're at. Just search The Wise Money Show. All right. Happy New Year, guys.
Happy New Year.
Yeah. It's a little awkward recording this in advance, but Happy New Year to you.
Hey, we specialize in awkward.
That's right. So listen, this is a time of sort of the holidays. Holidays are ending, and it's time of celebration, depending on which, football team you're rooting for and all of that. But it's at this juncture where you're just naturally looking forward to the upcoming year. Well, listen, 2022 was rocky. And if you listen to any of the talking heads financially, 2023 could be rocky as well. Could be challenging. They're talking a lot about, recession.
None of them are talking about it could be. They are flat out saying it is going to be.
High confidence, huh?
Right. Because you look at these economists, they have predicted 13 of the last 4 recessions. They're good at it.
One of my favorite Warren Buffett quotes, just did a video on the Wise Money Show about my top 5 favorites. You should go check that out. It's pretty good. Of course, I think it's pretty good because it's my opinion.
I'm sure it's amazing, Mike.
Amazing. Check out this wisdom. But he says one of my favorites is forecasts tell you a lot about the forecaster. It tells you very little about the future. And economists and really stock market predictors, that's very, very true. But it's almost unanimous. Economists are saying there's going to be a recession in 2023. So why is that, guys? Let's wade into that. And even, did the recession actually start in 2022?
Yeah, and that's what we'll have to find out, right? Some people, depending on your political leanings even, back in the middle part of 2022, a lot of folks were calling, hey, we're in a recession, right? Mm-hmm. And maybe even using that as a little bit of a political club in a way. But that's because one of the definitions of recession is the economic activity in this country shrinking for 2 quarters in a row? Mm-hmm. And we officially hit that. Yep. The first 2 quarters of 2022, that's exactly what happened. Now, some economists were quick to explain that away, saying, well, you can't really count first quarter because of some exchange rate issues and imports, exports, that kind of thing, having an oversized influence during that quarter. Things kind of bounced back in the second half of 2022, and now it's like the real recession's going to hit. Right. That's what everyone's saying in the first couple quarters of 2023. But we'll see. Right.
Technically, the recession is called by, what is it, 8 or 9 economists, eggheads in the National Bureau of Economic Research.
Yep, NBER, National Bureau of Economic Research.
And they meet in some hidden, I guess I'm thinking like this underground club, like the Mason.
No, they're in Cancun, dude.
So they don't tell you when they meet.
Kanye could tell you.
They don't tell you when they meet. There's no official kind of schedule, and they'll just tell you when they tell you. I also think so we had 2 consecutive quarters of negative GDP. I would have said we're in a recession, and you could feel the economy contracting. Mm-hmm. And then we had a surge in GDP in the third quarter. And the final numbers aren't in right now, but the GDP Now data from Atlanta, which you can't rely on, but it's pretty reliable, says GDP surged again in the fourth quarter. Here's my guess. When you print $5 trillion and dump it into the economy, you have no idea what's going to happen. And there's going to be all sorts of distortions that defy logic and reason and history. And so I was one of the ones saying, I think we're in a recession right now in the middle of 2022. You could see the economy contracting. I think many economists are saying, no, that contraction just continues in 2023. And yeah, it's weird because we've got this excess, these excess job openings. So the labor market's still very, very strained. A third definition of a recession is when my neighbor loses their job. and the depression is when I lose my job.
That's right. Yep.
And we haven't had those job changes. We're starting to see that.
Right? Yeah, and I think, this is a show about financial planning. So whether there is a recession or not, the question is, how now should I live? Because you could be in an industry that has been completely unfazed over the last 3 years. As a matter of fact, has benefited from everything going on. And you might be looking and saying, recession, what are you talking about? Yeah. And you might be in an industry that has been seen some really difficult times. So I don't recall a time when I've seen so many different people impacted in different ways all at the same time.
It's so polarized. Yeah.
But it does feel strange this time because if unemployment is often one of the hallmark metrics that determine whether or not we're in a recession, again, if unemployment is so low, and if you did even lose your job, there's 3 more waiting for you out there. It's hard to imagine unemployment ballooning on us, but that's exactly what happens in a recession. It's something to be aware of. But it's one of the reasons why a lot of economists have said, no, we're not there yet.
Yeah. And we won't see one, actually. Even Goldman Sachs, I think, earlier in December said, hey, here's why we're not going to see a recession next year, even though the growing number of economists, depending on where you look, it's somewhere between 35% of economists say we're going to see a recession. I've seen 100%. I've seen that thrown around. And here's sort of the crux of it. The Federal Reserve, we printed $5 trillion, increased the M2 money supply by an extraordinary amount. And then, surprise, we have inflation.
Yeah.
Wow. I didn't see that one coming. And now the Fed has woken up to, oh, wait, yeah, we did create inflation. No, actually, they didn't wake up to that. But inflation's a real problem.
Yeah.
It impacts everyone, those that have and those that have not. And we have got to get this under control. And so they've got to fight demand so that people are less willing to bid prices up and push prices higher. And how do you fight demand without actually fighting the economy and slowing the economy down? That's been this discussion of, are we going to see a soft landing or not? And we'll see. But the Fed still has to fight inflation. And in a way, they're fighting the economy.
That's right, because 2/3 of the economy is made up of Americans, you, me, all our neighbors and friends going out and spending money. It's just consumption. We are a consumption-based economy. And that's not a bad thing. It just means that when we all slow down or get more cautious at the same time, out of concern or caution for the future, that is what creates that slowdown in the economy. That's what creates the recession itself. And one of the ways that they do that is by raising interest rates so that we're less likely to go out and borrow money for that consumption.
So when they do that, they can't raise all interest rates at the same time, although they certainly try, and they have taken extraordinary measures to really control the free market. But they raise the short-term interest rate, very, very, very short-term interest rate. And when they do that and they keep pushing it up, if longer-term interest rates don't move higher as well, you get this weird thing called an inverted yield curve, which is about the geekiest thing on the planet. But it's a distortion. It demonstrates a distortion in the economy where, boy, interest rates in the short term are higher, than interest rates in the long term. That doesn't make sense. And that inverted yield curve has occurred before every recession going back, I think, 70, 80 years. And sometimes it happens and a recession doesn't follow immediately. But every single recession has had this occur within, 12, 18 months before the recession started. It happened. Yeah, I mean, yes, it actually happened that yield curve inverted before even the COVID recession, which was sort of self-induced. But we've got the steepest inverted yield curve that we've seen right now. By some measures, we haven't seen it this steep ever before. So if we see a recession, how should you be preparing to thrive in 2023? We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern Time every Saturday morning. Also on podcast at the same time, so check it out there. But then the content's broken up the way that it is because it also airs on a few radio stations locally where we are headquartered. All throughout the work week, though, we've got Next Wise Step videos, so tons of content. Anytime you're thinking, I'm struggling with this financial issue, odds are we've created some content around it, and you'll find it in the library here. So make sure you turn on, hit that notification, hit subscribe button, turn on notifications. If you like the content, thank you very much.
Okay, is it too soon to make Kanye jokes? I'm sure.
I don't think he's allowed to be on this show at all.
Okay.
All right. I think we hit most of recession talk. The only thing that when we were talking, I was like, I don't know if we'll hit yield curve. I feel like we need to hit that. And then I was able to take the baton from you.
You've been eager to go there all morning.
No, so I know,
you couldn't wait to talk about.
Here's what we got to do. We got to get down to brass tacks.
Well, then let's go.
What should you do?
Yep.
Okay.
Let's get to it.
Let's go.
Many economists are forecasting a recession for next year, for this upcoming year. If we see a recession, what should you be doing right now in your finances? We're helping you with that. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFT studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on podcast. Wherever you listen, go check it out. Subscribe to it there, or follow us there, and rate the program. We appreciate that. That helps others find us as well. All right, so we're talking about how to thrive in 2023. What do you need to do financially in right now to thrive in 2023? And listen, you might say, well, I have some influence on that, but I don't have complete control. We might be facing a recession. We might be. So if we do see a recession later this year, none of us should be surprised. We had a team day at Korhorn Financial Group a couple months ago, and I was doing a session with the team, and I was sharing, listen, the storm clouds are right ahead. They're very dark. There's a lot of wind. They might break up. Like this thing might blow over, and that would be fantastic. Mm-hmm. But because we are seeing all these signs, you should at least close the windows. Yeah. Right? Like roll down that umbrella that, on the porch, shut the garage, that sort of stuff. So I hope we don't see a recession. If we do, though, what should you be doing in your finances right now to be ready?
So I want to actually share a little bit of data that I saw recently I've got all kinds of nerdy charts that I share with clients during meetings. I know you guys do too. That's kind of the sign that clients know the meeting's really getting started when Josh gets his nerdy charts out. But one of them that just kind of caught my attention recently was showing how coming out of the pandemic, basically mid-2020 to mid-2021, Americans as a whole saw more savings accumulating and building up. No surprise there, right? The government was dumping money out into people's laps and everything.
And you couldn't go spend it, by the way.
That's right.
Yeah, places were closed.
So there was some pent-up demand just because you couldn't go out and do the normal activities that you would enjoy. But what stood out to me, though, is that for the past year now, there's been almost $1 trillion of spend down of that cash. Mm-hmm. Now, why does that matter? I would just ask you to give some thought to your own financial life and say, okay, does my life follow that pattern? Was I building some savings for about a year, and have I been depleting some savings over the past year or so? And if you are, then it's a sign that your expenses have started climbing above where your income is, and so you're making ends meet by spending down some of that cash that you've been building up. And to me, if those storm clouds are out on the horizon, if there is some risk of a recession and maybe it affects you personally, what do you do to get ready for that? The first thing is looking at your spending, looking at the budget to make sure that if you could cut back on some of that spending down of cash that you had accumulated, try to preserve cash, that kind of thing. Maybe even make the first half of this year a time where you're being conservative enough to build up some cash. Having cash allows you to kind of smooth out some of the rough spots, or to have a fallback if an unfortunate event like losing a job temporarily or a cut in pay or something like that were to occur.
We're at New Year's resolution time. We're at goal time, and I can't think of one that's more important than updating your budget. Like, what is your budget for 2023? It's changed. It's different. Josh, I'm going to say chicken wings are more expensive, right? Gas now has come back down in cost.
Like, you had to go there.
There's lots of changes, and my guess is you haven't wanted to look. It's sort of like a relationship that once was really special to you, and now there's just some gunk in between you and this person, and it might be too painful to root it out, and so you just sort of ignore it. I don't want to go there. We'll just pretend everything's okay. I think that's the approach that many people are taking with their month-to-month spending. And I would encourage you, lean in. Lean in. It might be painful. You might not like what you're going to see, but you're going to experience it anyway. So let's at least plan it out.
Yeah, as I'm sitting here reflecting on New Year's resolutions, and Mike, you're challenging people that the most important thing that they could do is look at their finances and their budget. I think, well, if you guys want to party with Mike tonight, he'll be at the library.
Yeah, that's right. That's right. No, the most important thing in your finances.
No, I agree.
Right?
Well, I think I would go up a step, because really, here's my challenge to you. Am I feeling confident right now? And am I feeling confident in my life? And then, because this is a show about finances, am I feeling confident in my financial life? And what are the things that are helping me feel confident about my financial life? And what are the things that are causing me to not be confident, or even possibly have some sort of fear as it relates to my financial future?
Oh, gosh, I'm so glad you went there. I feel like this budget thing, I think there's a lot of fear that's holding people back.
Right.
I feel it a little bit, guys. I'm not going to lie. So we've got the Bernard family has 7 sports going at this moment, and a few of them being travel from mid-February to mid-July. We have 11 overnight weekends in hotels. Nice. I don't even know how many weekends that includes.
You start renting your own house on those weekends.
So fear is real, guys. When you're looking at your budget and your finances.
Right. So when you look at this, you say, well, what process do I have that if I just work the plan, it will eliminate fear. It will eliminate uncertainty. And do you have a process that does that? Because if you don't, I would encourage you to get one. And if you do, you're one of the few that actually does. If I talk to people tonight at the party, and you don't want to be obnoxious about this, but you can say, hey, how you feeling about things? Because there are a lot of people that either have fear because they aren't sure what the future brings, or the interesting one to me is, I fear that Josh and Mike are doing better than me, and I got to figure out somehow a way to keep up with them or secure for myself what those guys have.
So I just shared with you guys recently this interview from Charlie Munger, who no one knows who he is unless you're a geek like us, but it's Warren Buffett's sort of right-hand man, and they co-created, right? Warren Buffett was sort of the lead, but they co-created that. It was just extremely wise. And he talked about the world is not ruled by greed. it's ruled by envy, and just how it doesn't matter if I've got it pretty good. The simple fact that someone else out there has it better just wrecks people, some people. And he sort of pointed out that it seems to be wrecking more people these days than it might have in the past. And I gotta say, I see that. I feel that. I would assume he's right. That this, I can't believe someone else has this. I have this struggle, and it doesn't look like this person has this struggle. Therefore, I'm totally disrupted by that. Oh, you got to conquer that in your life, especially in your finances.
And to me, one of the best ways to do it is just to get focused on your stuff, because that's all you're ever going to be responsible for. Someone doing better is not the reason for you doing worse.
Yeah.
So you say, okay, well, what if Mike's doing better than me? If I wish that Mike would do worse. No, that's not going to help me one iota.
Yeah.
What will help me is to focus on what's in front of me. And I don't know, I've lived on this earth long enough. I mean, you wonder, am I achieving all I was supposed to achieve? Am I getting done everything I was supposed to get done? Because you can look around by the time you get to be my age, and there are some guys that have the same number of years in, and they've done a lot more stuff. And you think, well, was I supposed to be doing something different or better or more? And so this is where I think if you can put the blinders on and say, look, I'm going to focus on just what I have. And Josh, I love what you said, the budget, but I think what I'd be looking at is needs and wants, and do I have an income or an expense problem? Because those are the things, if I can focus on those, because in the last year or two, the expenses have changed.
Yeah. The stuff you need to do now costs more, or it's different.
The stuff you want to buy costs more.
Yeah. Typically, in a budget, you're going to build out all of your income and then your normal expenses, your fixed and your variable, and assessing which of these are needs, which of them are wants. If you need to cut, you need to cut on with the want. So your CFP can help you with that. There's a lot more to focus on if we're going to see a recession. How can you thrive? We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Oh, guys, got a little preachy there. It was so good. It feels, I don't know who can hang with it. But okay, getting it down to, just in case that felt a little too nebulous for some or big picture, updating your budget. But what else? Because
here's the thing with the whole updating your budget. Like, do you need to update your budget right now? Why? Do you have a budget? Do you have a budget that works? Right? And if you don't, really, it's more. It goes beyond the budget. It's about the operating system. Like, what is the operating system that I have for my finances? And it's likely I need an external stimulus to get my operating system correct.
And yet, sometimes pay changes at the beginning of the year, tax withholding changes at the beginning of the year, health insurance or other things change at the beginning of the year. You know, lots of people are working 4 days a week instead of 5 now, right? So you've seen a pay cut. And so I think this is a natural time to reset the budget. And because things have been so unruly over the past 18 months.
But the folks listening to this, I mean, statistically, just don't have a budget. If you're gonna be, if you're gonna look at statistics. So to me, it's getting, like, have I tried a budget in the past, and did it work? And am I still using it? And if not, what do I need to do to get on that horse and ride it?
Yeah. All right, we'll pick it back up, and let's try to.
Will I get to talk?
Yes, you will.
Okay.
No.
I've got some ideas.
I can't wait to hear it. All right. If we see a recession in the upcoming year, are you ready? Are you prepared? I hope so. I hope you have confidence in your financial life. Clarity and confidence. That's what your CFP should bring. we're going to help you. We're helping with that right now. What should you be doing today to prepare for a recession? This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn, Josh Gregory. Every episode of the Wise Money Show is on the YouTube channel, as well as a lot of other content. Lots of discussion about, well, what should you be doing to prepare for a recession? What are some of the things that you should be doing in your financial life? So make sure you go to YouTube, search the Wise Money Show, subscribe to the channel, and turn on notifications so you're made aware every time we drop new content, which is all the time. So, all right. So the big idea, how can you thrive financially in 2023? Well, listen, we might be seeing a recession. A lot of people are expecting or anticipating a slowdown. You might have already felt it. In our area where we're located, there's the RV industry is very, very big. There are many RV areas that have had layoffs already. Guys haven't been working full shifts since before Thanksgiving. I heard one story, I don't know if it's true, could be rumor. Before Thanksgiving, they said, "Hey, we'll see you in February."
Wow.
Yeah, and I don't know if that's just rumor or not. I've seen friends of friends, sort of the Facebook friend, complaining about now being on unemployment. I mean, that's real.
Yeah,
it's crazy.
happening.
We haven't seen that in a while, and so, all right. So, what should you be doing in your finances if we do see some economic turbulence or recession later this year?
Earlier this week, Tanner Watson and I, he's one of our certified financial planners, a rising star here at KFG. We were starting a brand new relationship with a new client, and in that first meeting, we looked at, we had two priorities because we were a little squeezed on time. We wanted to know, do we have a good, clean balance sheet for where this client stands in their financial life today? Do they have a clear picture of the financial health that they have? And the balance sheet where you're looking at all of the assets that you own in your name and subtract out the liabilities, the debts that you owe to other people to get this bottom line net worth number. It's a fantastic place to go to just say, okay, is there anything that we could be doing differently in our financial life, in the positioning of assets and paying down debts, that sort of thing, to just put us in a stronger position or a more confident position, which is especially important if you are lacking some confidence in the future, right? If you're looking out on the horizon and you're like, man, I might be affected by this recession if it does hit. So that was the first thing that we looked at, and we gave them some suggestions on improving the rate of return that they were getting on some of their cash assets and paying off some quick debts to free up some cash flow, that kind of thing. That's just kind of blocking and tackling financial planning, right? Mm-hmm. But then beyond that, it was also helping them get clarity on what are the true goals, the most important things that they're trying to achieve in their financial life. And this may be something that you've had lots of clarity on in the past. Maybe you've known, I know exactly what my top 5 goals are that I'm trying to achieve. Do you have them in order, and is it still clear in your mind, though? Because if we go into a recession and you are affected in some way, maybe your income is reduced or you have a period of time where you don't even have any income, it's important for you to not lose sight of those things that you're trying to achieve over time. And what you don't want to do is start cutting out certain things, and before you know it, you're actually not even directing your resources towards the most important goals anymore, right? We always want to make sure that your first dollar is going towards your first goal, right?
Yeah.
And unfortunately, recessions can just kind of wreak some havoc. They can disrupt things. Maybe you have been contributing faithfully to your 401k, and then all of a sudden you were laid off. And so now there's no progress happening towards retirement, and yet you're still making progress on goal number 5, right?
Yeah.
Because that one didn't get disrupted for some reason. So I guess the point is, when life feels out of control, you want to be able to just be real clear on where do you still have influence, and make sure that you're focusing on the things that really matter to you most, even during a recession. So don't lose sight of your goals. It is the whole purpose of financial planning. You want to know where you are today, know where you're headed to, and make sure that you're adjusting your path and your priorities along the way.
I couldn't agree more, and I'm just going to recap sort of the tangible things that we've said since we like to talk. So first is updating your budget. If we're going to see a recession upcoming, that may involve changes to your income, distortions to your income, or the need for you to flex a little bit financially. Therefore, you've got to update your budget so that you see how much margin do I have? Have I accounted for everything properly? And speaking to Josh's point about goals, you're then able to see, yep, have I recalibrated my goals, and am I doing what I should for that? So number one, update budget. Number two, Josh, you snuck it in, and gosh, there's so much there, and that is updating your balance sheet. Wow, like that sounds just about as geeky as a budget, okay? But looking at all of your assets and updating the values, and then all of your liabilities and being real about that. And you don't do that to have some sort of, I don't know, pride or shame, but rather clarity. Mm-hmm. How much do you have in cash? And then the question of, well, is that the right amount, or is it in the right accounts? Is there a way to get better interest, and so on? How much debt do you have? What are the sources? And for some of you, it might be, well, actually, we've got a little bit more debt than normal. If you look at statistics, we've got now over $1 trillion on credit card balances. If you look at interest rates on credit cards, they've gone from 16%, which is not cheap, to 19% on average over the past year. So we're consumers, it appears, not only have they spent through a lot of that surplus savings that they had, they're also have had a hard time dealing with higher expenses, inflation, and they've put that on plastic. And so updating your net worth allows you to, face reality. Mm-hmm. And you list all of that out. And then finally, the last thing that Josh said is then recalibrate those goals and make sure that you know what the right priorities are. It's very possible, if this is you, that it wasn't one of your high priority goals to build up your savings because it was built up. And now you need to reprioritize and say, you know what, the emergency fund, we only have $7,000 in there now, and we want to have 15. That now needs to be reprioritized to goal number one. Or we'd never had credit card debt. We paid the balance off every single month, and you know what? Now we've got this nagging $1,500 on there. We got to pay this off. Now that becomes goal number one, and you've got to recalibrate. Right now is the right time to recalibrate what those goals are and quantify financially how do you achieve them.
And right now is a time to really pay attention to interest rates. So when you're building out your balance sheet, I like to see details. So if I see that I've got debt, what is the interest rate that debt is at? Mm-hmm. And then I can look at my savings accounts and see what am I earning on my savings accounts? Because right now you can earn 4% on an FDIC insured money market account.
Right.
And so you say, well, wait a minute, if I can earn 4%, what am I earning? Likely, if it's in a local bank or credit union, you're not earning anywhere near that. So you might need to say, hey, how do I get these dollars working harder for me? And you need to look and say, all right, I mean, I get this nice slip from the bank every other month, it seems like. And because Korhorn Financial Group has a line of credit, and we don't have anything on it, but we have it just in case. And every other month, it seems like I'm getting a slip from the bank saying, hey, congratulations, your interest rate on your line of credit has just increased. And they've taken it from, I don't know what it was. It seemed like it was in the threes maybe a year or two ago to the high sevens now.
Yeah.
And so what you're paying, if you're paying any kind of variable interest rate, you're paying more interest than you might realize.
I love that you're encouraging people to get into the details of their financial life and checking those, not only those balances that might be creeping up, but the interest rates themselves could be creeping up. Another place that you might want to pay attention to some of the details of your life is to just kind of take inventory of what are the areas where you have maybe deferred some maintenance that needs to get taken care of. I'm thinking about cars and houses and things like that. You know, your furnace, have you been maintaining it? Your roof, is it, starting to get a little bit old and might need to be replaced? Have you been taking care of your cars? Because in good times, you might just sort of ignore these things. You're busy living life. And unfortunately, deferred maintenance can become an issue. And what does Murphy's Law say? It's always going to happen at the wrong time, right?
Well, and that also it sort of Kevin mentioned the operating system for your cash flow, that 3 bank account system. That's bucket number 2. And defining those goals right now is very important. What else should you do in your finances if a recession is on the horizon? We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. All right, I think we keep going. And at some point in this last segment, we pivot to, maybe what are some examples of other financial goals to consider?
And one thing, so the student loan repayment has been deferred again until June of next year.
When you said they're going to defer it again, I said, I didn't think you were right. And gosh, you were right.
So
it seemed final. It really did.
It does seem like you would want to, and I don't know if we need to talk about this and the recorded part, but should you have a strategy for that? I'm thinking you probably should have a strategy. You should be making those payments right now to yourself in a bank account and just accumulating that and accumulating interest on it.
Let's hit it. Yeah,
okay.
Let's hit it. All right, last segment. Land on the plane.
No.
Yeah.
No.
Yeah, this is 4th.
Oh, no.
No, this is 4th.
Wait, I'm with Lindsay.
No.
If
Definitely 4th.
that's the case, so we started recording at 8:15. We turned it on at 8:15.
Can you see how long
We've been recording for 35 minutes?
Yeah, that's 3 segments.
Okay. Wow.
Without question.
It's true.
Feel free
I'm
to strike
with
this
Mike
from the
on this
record
one.
if you'd like.
Yeah, can we throw
Are these guys really that confused about what time it is? I must not.
I am.
Their financial advice.
So
if
this
their
is the-
financial advice is as good as their
So this is the
time
last
tracking.
one?
Yeah.
Okay.
Yep. So the first segment was all about recession. And at that break, you were like, no, let's get into the details. So we got into the details and spent the entire time talking about budget. And then we just had the last segment where Josh talked about net worth, goals, and everything else. So it was recession, budget, and then the last segment that we just did. So now this is segment 4. Thank you. I got this one. Normally maybe not, but that's why I say it.
We wonder how we end up with 5-segment shows.
This one feels. It's interesting. You guys say that was just 2 because this feels like it could be 5. All right, here we go. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Stay up to date on all Wise Money content. Learn more about the show and the firm as well. WiseMoneyShow.com. You can find us there, and then all over social media, wherever you're at, we are there as well. Not on TikTok, maybe. Lindsay's trying to talk us into it, but not there yet. So YouTube, search the Wise Money Show. You can find us there. So, all right, we're talking about how to thrive, really, in 2023. If you're a big fan of the Wise Money Show, you know right around this time we're talking about goals, resolutions, financial goals. And listen, we might be facing some financial headwinds in 2023 that disrupt your current trajectory in your finances. So how do you get prepared for that? And if the storm clouds blow over, what else? What other things should you be striving for in your finances? So, Kevin, during the break, you were talking about the student loan confusion that we're in, and that sometimes when you're confused, you stop.
Yeah.
You don't do anything. And so what are some goals, especially if we do, in fact, see a recession, an approach or a goal that people should have if they've got student loans?
So, again, going back to the beginning, we want to have an operating system that works. If you do, great. If you don't, make sure you're working with a certified financial planner. If you have student loans, then and you say, hey, I haven't had to make a payment since 2020 on those things. What I would encourage you to do is put that in your 2023 budget and start making a payment. And you say, well, hey, I don't need to make a payment because it's not incurring any interest or whatever the case may be. I would make that payment to myself. So just move it from your checking account to an online money market account, squirrel that money away, and have it sitting there, because you don't know. Some people listening to this are hanging on every word, hoping that this this debt transfer program is going to happen, and they're going to be relieved of this $10,000 or $20,000 that they might owe. That may or may not happen. We don't know. The courts, as of today, the courts have said no. And so we're going to...
As of the time we're recording.
So
it could change here.
Right.
I don't know.
So, and we're recording today. So, based on that current reality. So anyway, so who knows what's going to happen in June, right? Because in June they might say, listen, every student loan out there, all $1.7 trillion is just forgiven. Let's we'll give you a mulligan on that, and we're going to start over. Who knows what's going to happen? So, but I would prepare, and I would be doing things that give me confidence. And so, by saying, "Hey, this thing's going to fire up in June, I believe, this year of 2023, according to what they've scheduled," I'd start January 1 making that payment. I would look at all the things that need to happen in 2023, and I'd make sure my January budget is right. Because if somehow my January budget is off or off by a mile, it's going to be a pretty awful surprise in June or July when I have to start firing up that payment program again.
I like the starting that payment now. If you haven't been doing this, I know a lot of people have, paying themselves whatever that student loan payment would have been. But starting it now, if you haven't been, make sure your budget is right, which aligns with kind of the first thing that we recommended, number one. And number two, you're now getting more interest on that. Mm-hmm. And three, I still have yet to hear anyone come in with a financial regret of saving money. It hasn't happened yet. It might happen. And so if we find out everything's forgiven or whatever, some other strange, scenario, okay, worst scenario is you saved up money. Fantastic, right? Then you're better off. Speaking of, now going back to what should some financial goals be? What should you be striving for financially, even if we see a recession in 2023? Continuing to save for your financial future. Yeah. Guys, I can't believe we're now, there was a little debate, I'm going to throw this out there, debate what segment we are in, because we are geeks and we just love talking. What day is it? I don't even know. But can't believe we've made it this far in the show and we haven't talked about this, because so often when the markets get jittery, when you have these, a disruption in your income, disruption in your finances, very quickly it's can't save. It can't save. And there's no judging here. I get it, because something's got to pivot, and that many times can feel like the easiest one and the least consequential, right? But
you're talking about your long-term investing, the 401k contributions, the Roth IRA contributions, that sort of thing.
Because not only that, but because, I contributed, last year in my 401k in 2022, I contributed $5,000, and my 401k for the year finished down 10. So that money's gone. No, you have more shares, right? Those dollars went into shares. These aren't physical dollars like they are in your bank account, where when the balance goes down, that money's gone. No, you own shares. But the dollars that you're investing during volatile times tend to be the ones that are the hardest working for you.
That's right. And really, this creates the positive side of a recession, right? Because a recession is when the economy is shrinking, but often prior to and even during a recession, there's something crazy going on with your investments as well. And it's a bear market. And when your investments are down and you're feeling like that is the last place I want to direct some money, I don't want to put any more into my 401k. Are you crazy? That's exactly when you have the best bargain opportunities on the table. And so those of you who are not being impacted by a recession, or those that are in industries that happen to be blessed and can thrive in this type of an environment, you may be given an amazing buying opportunity that we haven't seen in a long time.
So let me just geek out for a little bit. Number one, that this is all historical averages. And again, when you print so much money, you have no idea. History is less reliable about predicting what you're going to go through. So, but normally a recession is called about 7 months after it started. because you kind of lean on that original definition of 2 consecutive quarters. So that's 6 months. And then you don't even get the data for a month. So normally a recession is called about 7 months after it starts. On average, when does the stock market bottom? About 7 months after the recession starts. This is just historical data, so who knows? But that's exactly when they say, okay, we're in a recession, is historically the exact time you want to be buying. Now, Morningstar recently did this analysis. I can't believe they spent money on this and actually did this research because it's so obvious, but it just goes contrary to our emotions. And that is, when the stock market's in a bear market, should you pause your 401k savings? And they looked at 2020. They looked at 2008 and they looked at 2000. And the researcher did there's no way anyone would do this, because they basically said, if you stop contributing to your 401k in January of 2000, but you start in mid-2002, no one would start at that time. No one's going to start at the bottom. Same thing. Did you stop in January of 2008? But start in March of 2009. You wouldn't. Right. Like if you were scared in January of 2008, there's no way you're investing in March of 2009. There's no way.
Maybe you've got a time machine.
And so,
you're Biff.
And so in each of the previous recessions, you do the math. This person did the math. The person that just continued saving in their 401k versus essentially the person that stopped and then picked the bottom. The person that continued saving won in every situation.
Yeah. So even when you stack it in favor of the other.
Yeah. Right. So if you're going to stop something right now, think about stopping that extra payment on your 3% mortgage. And just if you said, hey, I've got to cut back somewhere, I'm making an extra payment on my mortgage, or should I reduce my savings in my 401k or my IRA or my Roth IRA? Maybe if you fund those things annually and you're not quite at if you fund those in January and you're not quite where you need to be in some of the other areas of your life, you might want to push that back a little bit and get those areas firmed up.
The big idea here, and again, shame on us for taking this whole show and not talking about it. Guys, these are a bunch of ideas, and a lot of them are principles based that you should approach your finances with, but knowing exactly what pivots or how prepared you are for a recession or what adjustments you should make or in your finances, that's your CFP. Your CFP, if you heard Josh talk about a balance sheet and you wanted to, rip your hair out, you're not going to create that. Your CFP is going to create that for you, right? Your budget, your CFP is going to help you with that. Knowing how much to contribute and what changes to make your CFP is going to help you with that, as long as they're doing comprehensive financial planning. So that's the real way to prepare for a recession. That's all the time we have for today. On behalf of Josh Gregory, Kevin Korhorn, all of us at KFG, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.